Hello everyone, Kolonji Murray with TaxAssurances. Just wanted to do a helpful video around couples that go through divorce. So unfortunately, one of the things that I've had to deal with as a tax preparer are situation scenarios where couples have been married for a couple of years, there are children, there is real estate, there are businesses, college educations, student loans, all of the things that happen and occur during the course of a marriage. And unfortunately, divorce is a certain reality that I've come across. And I just wanted to give some thoughts around, not necessarily solutions, but just kind of thoughts around what to kind of think about with that process. Obviously, the more amicable the divorce can be, the easier it is to kind of work through some of those tax-related issues that will come up. The more difficult, the more contentious the divorce is, the more difficult it becomes to kind of resolving some of the issues. Obviously, first and foremost, has to do with situations where there are kids. So who gets the kids? Who claims the kids? If it is a situation where someone is filing single as opposed to someone is filing head of household. One of the things that I have done is I've worked with couples that, again, have been divorced. And as long as they can distinguish who gets who, we can kind of work through from a tax standpoint who it benefits the most overall for the overall family to take the children as a tax deduction. So we can run the numbers, and see how that looks when it comes to, like I said, claiming the kids. Obviously, part of that is going to be a situation where you're looking at, the education expenses, especially if they're in college. Obviously, if they are participating in after-school activities, and we're starting to talk about not just the child tax credit, but the dependent care credit that can be taken if, again, someone is claiming the children. Obviously, there's going to be a different standard deduction between someone that is filing single and someone that is filing head of household. If there is a home that is involved, who's claiming that home on their taxes when it comes to the real estate taxes, as well as taking the interest deduction. If there's rental income, kind of factoring that in as well. And then finally, if there's a business. So if there's a business and they're kind of separating, how does that get handled? Does one partner or one former spouse buy the other one out? Do they continue to run the business? So all of these things are situations that do have to be worked out. Again, the more amicable the couple can be, the better and easier it is to kind of resolve it and to just look at the pure numbers and the financials of it and kind of taking the emotion out of the divorce experience. But that's one of the things that I do as a tax preparer. You should look at if it's a situation where this is what you're going through in your lived experience, or someone that's going through that. If they can kind of work through some issues, run the numbers from a purely financial standpoint, they can kind of get to a place where they can figure out what makes the most sense for them. Like I said, really sitting down, crunching those numbers, looking at those numbers is kind of the best way to handle it. And then each one of those decisions can be made to kind of help resolve everything. If you've got more questions, by all means, you can reach out. But until then, take care.